Hey, Quants, gonna do a real quick one right now, and we have the interest rate coming up in about 18 minutes right now. I'm not planning on doing a stream through that or anything. I know a lot of people like to do that. I was thinking about waiting until after this happened to provide a quick video, but for the type of analysis that I generally do, I don't think that's going to change much for my stuff. So I'm not going to have any commentary on that just now. I just want to real quickly touch on some of the stuff that I went over yesterday. So I mentioned that if we had when I had originally done that video, we had not yet broke the previous pivot high, and so that currently was broken with a up bar, and so everything on the Gann Swing indicator that indicates trend. So we have the one bar that I have enabled right now. I have the one bar. I have the daily one bar, the daily two bar, and also the weekly one bar. And those are all showing an uptrend right now, which is great for positive price action. So if you are using that type of a method, the very basic way to provide some risk here would be to just if price drops below 87,000, then you would exit that position, because then that would invalidate some of those trends. On the master strategy, we're still seeing everything marked as bullish, and we have not yet gotten 821 crossed. And this also goes back to what I was talking about yesterday when I first got interested in Gann and I started reading a little bit about it. One of the things that I noticed was that it oftentimes can provide a quicker indication of price direction before this 821 cross, because in the master strategy, the 821 cross is the fastest signal that you will get. And so this signal is still a little bit of ways. I did put like a reverse projection when I built a strategy on this, and that was this EMA, EMA, because I was playing with using double EMAs and this kind of thing when I first built that years ago. And so anyways, I put a projection on there so it would give you an idea what price needs to be before that crosses. And so I'm not going to turn that on right now, because I'd have to turn that on and enable it, and I don't really want to mess with that stuff just yet. But I just want to point out that that cross hasn't happened, and price will need to move up a fair amount yet before we will see that cross. And so if you're trying to get a little bit of ahead of the action, you could potentially use some Gann Swing stuff as opposed to waiting for the master strategy. However, it's FM, since we are doing an interest rate day today. As with most interest rate days, would be very common to see a lot of whipsaw in price action. So I do some algorithmic trading, and I just let my bots run through those days. A lot of people will turn their bots off, and that's totally fine for them. Personally, I prefer to just let the statistics play out. I've found it to be about 50-50% in terms of when it wins and when it loses, which kind of just comes out in the wash, in my opinion, for economic days like this. But yeah, that is, if you were going to trade this manually, my personal preference using something like the master strategy would be to wait until a close occurs, and then I know either I got a cross or I didn't get a cross. Or if I wanted to go a little bit faster on that, I would use one of these moves above the swing pivots. In that context, I would also likely wait for some kind of a close on this particular day if I was doing manual trading. And that is simply because I would not want to get whipsawed with the price action. And it is very often the case that we see price move significantly one way to both directions, and then ultimately going one direction before the end of the day, which which might be the direction that I wouldn't want it to go if I was taking a position. So that's going to be it for today. Just real quick to get one out before the interest rate discussion, and kind of point out the fact that those Gann trends all turned up. Hope everyone is well, and we will see you on the next one. Peace, quants.